everyone, as we put February 2019 behind us, and as the market continues to march on, the question on everyone's mind is this really a V-shaped recovery, or is the bear market around the corner? In this video, we're going to be using my proprietary trading system, Trend GPS, to look at the monthly data and also look at the data about the past 99 years to answer this question. And in part 2, we're going to use my two other trading systems to look at the short-term direction of S&P daily charts. So okay, let's get started. So right now we are looking at the SPX, that's the S&P 500 index. We have three charts. The one on the right is the monthly, the one on the middle is the weekly, and the one on the left is daily. For those of you who are familiar with my videos, this is my entire trading system. I call it Pendragon 321. 3 for 3 power lines, that's the green, pink, and purple. And the 2 is the 2 sets of the trading signals. One is called Trend GPS, the other one is called Triangle, and one set of indicators. So today, we are going to use Trend GPS, the signal Trend GPS, to examine what's really going on with S&P 500 or US stock market in general. So let's look at it. So right now, I am going to expand. Everyone, you're looking right now at the monthly chart of SPX. Okay? And for brief introduction, right now we're going to be using the Trend GPS. So right away, you'll notice that there is a blue cross right here. So according to the Trend GPS system, every time you see a blue cross, that means the beginning of an uptrend. Okay, when the blue cross appears, that's the beginning of an uptrend. And then you also see blue, 3 blue dots. Okay, right here, and right here. Every time when you see a blue dot, okay, according to the Trend GPS system, that denotes a confirmed long signal. Okay, so blue dot means confirmed long signal. And if you see pink cross, like this one over here, then that is telling you the beginning of the downtrend. Okay, and if you see pink dots, then that's a confirmed short signal. Okay, so that's it. The system is fairly easy to understand. And what we're going to do right now is use this Trend GPS system and see what's going on in the US stock markets. Okay, so Friday was March 1st. So that means we have finally finished February. So now we have February's monthly chart in the history books now. We can now make better judgment. Right away, let's look at this. I mentioned this in previous video as well. In order for this to be a truly bear market, what the market have to do is, if you look at the past, as we're going to do pretty soon, the market must drop or at least reach the purple line, which is down here. Okay, right now it's indicating 2,237.51. That's the value of the purple line as of last Friday's close. Okay, let me label that right here. So in order for there to be a genuine bear market in the past, the price have to drop and reach and penetrate below that line. So far, since the low of last December, that has not happened. Now, the interesting thing is that we have a confirmed long signal since February. But during February, the reason I didn't want to make a video is because we never know what's going to happen in the market. Because it's conceivable that in February, maybe the market would drop a lot and cancel the sales, the long signal. But that did not happen. So now, Friday was March 1st. February is finished, so now we can analyze this more properly. So what I want you guys to look at is right now, every time, so the key we're going to do is that every time when we have blue dot happening, okay, that's a confirmed long signal, okay, would they lead to a bear market? So let's use this and look back on all the past history. See if the blue dot happened, is the market going up or is the market going down? Okay, overall general trend. That does not mean the market would not have a little bit up and down, actions, but in or retracement. But in general, overall, is the market going to go up? So this is point A. That's what we had most recently, and the previous one, it's point B. So right here is a case in point. well, you guys can see it's a confirmed long signal. The market went up a little bit, right? And then the market went down. But because it did not touch the purple line, overall, the market still go up. It still went up, okay? And that it was back in around July or toward the end of 2015. That's a 3-year nice uptrend right there. And then we go to either further back. Let's call this A. This is back in about October or September of 2011. Okay, another smooth uptrend up. Now back here, this one. Everybody see how the price touched the purple one and one below. That's why we have a beginning. And this is the 2008 bear market. Okay, the last housing bubble crash. Then let's keep going, looking back. Again, in this one, the market went up by about a couple months, and it proceeded to drop. We have another signal right here, blue dot going long signal. The market managed to go up for another 2 or 3 months, and then it went down. But what was going on here? This is the 2000 .com market crash. Okay, so now we had 2 confirmed bear markets. The price had to, challenge the purple line and dip below it. So let's go further back. We have another blue dot right here. This is back in about May or April of 1994. Notice that how it didn't even touch the purple line. As a result, you can say this is the beginning of the entire, very nice parabolic up move all the way until the 2000 crash. Everybody see that? Now let's go further back. We have another one down here. This is about end of October or November of 1990. Okay, same thing. It didn't quite touch the purple one. As a result, multi-year bull market. Okay, everybody see that? Let's go further back. Now we're looking at some interesting period now. First of all, 1984. Okay, did not touch the purple line. Even went for a month. It went on a few more months. Second time again, tried to challenge. That's about August 1984. Strong bull market leading up to the 1987 crash. And notice that right here, everybody look at this big bar right here. This is the 1987 crash. Okay, it did touch the purple one, but it did not penetrate below it. As a result, guess what? The market recovered nicely. Even though that so-called crash, that one day was very painful, but overall, the market still resumed its bull run. Okay, maybe we have 1 day or a month or 2 bear market. Right, crash was never fun, but nevertheless, that many market watchers will tell you that that's really marked the beginning of the multi-decade bull market until we finally culminated in 2000. Okay, now let's go further back. This is 1981. Same thing. You see how these 2 dots right here, and notice how they react around the purple one. Did not really crap below it. The market went up. Okay, now let's go back to the fun time. That was the 70s. Okay, again, the support held. It didn't really go up. Okay, now let's go back 1973. I think I could be wrong, but I believe this around the OPEC energy crisis and the big recession in the US. And here, notice how, with the data is running thing here, it dropped below the lines and the market went down. So now after that, because SPX, we don't have that long of a data, we don't have any purple line, so we're going to go to examine other data that's equally as good. So remember, we are about in 1973. So the next thing we're going to look at, let's look at Dow Jones Industrial Average. Now we have a much longer data now. So we were at 1973. So let's pick it up from there. Okay, right here. See, now we had a purple line now. Backwards in our SPX, we didn't have that. So look what happened here. Challenged the purple line. The market failed. Boom, bear market. Right, again. So far up to 1973, in order for there to be a true bear market, the market must first challenge the purple line, and the support has to fail before it dropped. Okay, now let's keep going further down. 1971, December 1971, touched the purple one, did not drop below it, went up. Here, 1969. Now, by the way, just a reminder, we're looking at Dow Jones Industrial Average now. Okay, these two blue dots in a row. Back in, let's say, August and September of 1969, challenged the purple line, failed. As a result, now we have a very nice downtrend. Okay, 1966, November, challenged the purple line again, did not drop, nice rally up. Okay, another one, here's a doozy. 1962, August. It challenged the purple line and it held. Look at that. It held. First it make a low, but then it make a higher low as a result. And even though, and you guys will see, there's a pending, it shows us a downtrend, right? Begin downtrend, but that did not really help the market because the key is the purple line. Key is really purple line. And it held purple line as a result. Look at that. This is a nice, beautiful uptrend. And these are usually multi-years uptrend. So this one was, let's see, August 1962, and the peak is February 1966. Multi years. Okay, again here. November 1960, didn't even reach the purple line. Market went up. Here again, January 1958. Touched the purple line, did not went below it, the support held, boom, went up. Okay, and another beautiful one right here. July 1953. This time, it didn't even go to the purple one, he went to the pink one, held, went up. Okay, and here now we're in the 1940s now. This is the right after World War II, 1946, October 1946, all the way till about August 1949. This is the post-war reconstruction era. See, everybody knows how the market is pretty much in the trading range, and several times you want to challenge the purple one, and the purple one held very well. Okay. And if you want to go market history, this is the few years after World War II. Everybody can say, you can even make an argument, this is really the beginning of the post-war recovery. We're talking about since World War II now, okay? 70, 80 years of time span. All right? Now let's keep going back. Everybody notice how the bear markets are universally below the purple line now? Okay. So now we have one right here. Let's take this one up first. This is July 1937. The market went up 2 months, it touched the purple one, it held, it bounced for 2 months, and it went down the next few months and proceeded challenge right here. Okay, so this one is below the purple line. Okay, that's what a bear market looked like, just like before. Right, we saw that before in 2000 and 2008. Okay. The next one is, let's keep going back. Go back to history. Well, at this point, I don't have any more purple line now, but it's we can easily surmise. You see this big drop right here, this entire down move. This is the 1929 famous market crash. Okay. So now we can keep going back. the market is going up. Okay, every time there's a blue dot, okay, that is usually the beginning of a multi-year high. So look back where we are right now. Okay, there's no guarantee, there's no 100% guarantee saying that this is the beginning of a multi-year long bull market again. However, the odds are in our favor. We just examined 100 years of stock index history. So the odds are very high at this point. It does not mean we will not have some retracement or some downward action up and down. But unless the stock market drop, okay, now we're looking at Dow Jones now. The Dow Jones Industrial Average, before I gave you the number for, SPX, the S&P. Now for Dow Jones, the number we need to watch out for, according to the system, is 20,533.99. That's like 20,534-ish. Give or take a few points, okay, because we don't have to ask for absolute precision, but that's the general level we must watch out for. So unless the market challenge, at least first you got to reach there before the support can even fail, you must first reach the support there. So those are the number that we have to look at. So based on this, based on past couple months of action, it is looking increasingly likely that this is indeed a V-shaped recovery, and we could be headed for multi-year bull market from this moment on. How is it going to happen? Honestly, I have no idea, because there are a lot of fundamental reasons why the bull market should be over, or at least we should enter a bear market now. But based on the chart, based on the system, and what we just examined, okay, everybody saw it. If you want, you can play back the video a few times, that this is where the market goes. Okay, now let's look at this thing on the left. Now we're looking at the SPY daily chart now. Okay, I want to introduce you two more other system that I have. This is for short-term trading. On the left, I don't have a good name yet. Let's call it dot system, because we have a whole bunch of blue dots and yellow dots. Every time we see yellow dots like this, that means we're going to short the market. And the yellow dots also act as your stop loss point for your short position. And when you have blue dots like these guys appear, then you're going to go long the market. And the blue dots also act as a long position. So as of Friday, we see a blue dot appear on the SPY. This is a daily chart now. So right now, that means that we are now holding a long position in SPY. And since this is the very first trade, and also that appeared in the middle of the candlestick, and we're going to place our first stop loss at below the previous pivot low, which is at 277.48. So that's place the stop loss slightly above that. So the stop loss for the long position, we're going to place it at 277.47. Okay, that's one way of doing it. Now on the one on the right, you see the yellow cross. Okay, so again, I don't have a name for it. I just call it a cross system. It gives again, these can also be used as the stop loss system. Okay, stop loss point. So this one is a little bit closer. This is more aggressive, and so for that price, it's at the yellow cross. It's at 278.92, but the low on Friday was 278.82. So it's below that. So if that's happening, I like to give a little room, since we're just speaking our long trade, a little room for the for the trade to run. So that we can use that for previous day's low, which is at 278.32. So we can place the stop at 278.31. So now you have two choices. If you're more aggressive, then you can place your stop loss at 278.31. If you're more conservative, then you can put this trade at 277.47. And the key is that as the stock moves in your favor, and the system, you guys see the dots will move up, we're going to move up our stop and to further reduce our risk along the way. Okay, so the key is to look for any and all excuses to reduce our risk. And that's the key to trading. So in this video, we basically cover the reason why, based on the monthly chart, that right now we think there's a very strong reason for the stock to be perhaps entering a another multi-year bull market. That does not mean they will not have any challenges. So let me know what you think. Okay, and you can do that by either leaving comments in this video, or if you want to contact me via email, my email address is right here. It's panlong321@outlook.com. So that's it, guys. Thank you for watching, and I will see you in the next video. Bye bye.